Hey guys, it's Chris and James, and today we're going to talk about will the market crash in 2021 or 2022?
That's right. So, Chris, what's the answer?
The answer is we don't really know. That's pretty much a good answer. I think that nobody really knows. But we do have some key indicators to suggest and some ideas that we'd like to convey to you
Well,
that might be of interest.
I will say, as a real estate agent, we have a lot of clients that do know when the market will crash, and they're waiting to buy until
Oh,
that time.
that's true.
So, what do you have to say to those buyers who know for sure that the market will crash sometime this year or next year?
I think they'll be too late.
They'll be too late, and
Yeah.
they'll miss out on a huge potential for growth opportunity. Because what we're seeing in Austin is last year we had a 40 something crazy 40% increase in profit, and there were people the whole way through this ride. Oh, I'm going to wait for the market to crash. It's going to crash in the next month. I can feel it.
Yeah.
They missed out on a huge opportunity, and potentially they're going to miss out on another huge opportunity of this next huge wave of increase in prices. Because, Chris, as a real estate agent in Austin, what do you see happening in the market right now?
So on the micro level, we're seeing that $300,000 that price point 3 to 4 is still high. There's still a ton of offers coming in for those types of properties,
Yeah.
especially North Austin. That's primarily where I work. But as you go up like 500 plus, we're starting to see a little bit of a downtrend in those particular areas. We're not seeing as many offers. And that could be because there's been a lot more inventory over the past few months
Hmm.
where back in June it was just very limited inventory. So that's basically what we're seeing in the on the micro scale of the market out here.
So, not really any slowdown with the lower end homes in the $300,000
Yeah,
range,
not at
but
all.
you are seeing a bit of a slowdown in the 500, maybe higher end properties.
Correct. Yeah, I mean that's what we've been. That's just what we've been seeing.
Okay. So, do you think there's any chance that these home values in Austin, specifically Austin, will we see a decrease in prices among the higher end properties?
I think over the short term, yeah. I think over the short term we're going to see it because
Hmm.
right now we're in a really interesting time. It's August. This is where folks are starting to go back to school. People have already found their house usually, or maybe they decide, okay, well, we're going to just go ahead and rent. One of the two. So I think that for the short period we're going to see that, but once January comes around, I think we're probably going to see a pickup in the market again.
Okay, so a slight dip and then pick back up.
Yeah.
Okay. So that's what about for the lower end houses? What do you think they'll ever go down in price?
I don't think I don't think we see. It's definitely not looking that way.
Okay.
It's definitely not looking like if because if you look at the median income in the general area of Austin, you know it's pretty high. So I just don't see that price changing
Gotcha.
much.
Because people can afford those lower end houses, and there's a
Yeah.
huge demand. Um, awesome. So yeah, one thing I wanted to mention, as Chris said, he does predict a slight dip in prices among the higher end houses, 500 and above. But here's why this shouldn't matter to you and why you shouldn't try to time the market. The concept of timing the market is a very bad idea. I mean, a lot of people try to do it and most people fail. The ones who succeed are the ones who get lucky because if enough people try it, some people will actually time the market properly. However, the most important thing is called time in the market, meaning you have spent years being in the market, owning real estate or owning whatever assets you are invested in, because that compound interest with enough years is going to be more valuable than trying to get that perfect time to make the most amount of profit in the short term. And as a smart investor, I would imagine that you are investing for the long term, meaning you're looking 10, 20, 30 years into the future. A small dip in prices now isn't going to affect how much more valuable that house will be due to appreciation 10, 20, 30 years down the road. It'll be a very minuscule amount. So, Chris?
Yeah, I
Any
think
final thoughts?
I think that everybody's going to have their own like strategy when it comes to, I'm in the middle. I feel like everyone's going to have their own strategy when it comes to investing. With James's strategy, if you're thinking that way, then honestly, any time to come into the market's a good time. But if you're thinking, maybe you had luck and you've timed the market a few times, maybe you know what you're doing. And that's just something that I think it's more personal perspective on it. But if you're looking at the long-term success of real estate, we've always seen real estate go up. I mean, it's just historical data.
And I think you were mentioning like the price of homes in the '60s were around 12,000. There will never be a crash so great that the house pricing will go back down to $12,000.
I don't think so. I don't think so.
Okay. Well, I think hopefully this video is valuable to you and you learned something about market cycles.
Yep.
And stay tuned.
That's right. All right. Subscribe.